I'm Natasha Chilingarian.
I'm Michael Ogden. This is Shared Accounts with CU Times, and it's been a bit, really, since the three of us have recorded together. Earlier this year, we don't hide it necessarily, but we began recording episodes really months in advance due to some life updates that were happening with the group here. But today we're recording pretty close to the episode release date as far as the intro goes. And I wanted to just ask really a check-in question with the two of you, Natasha and Producer Zach. We're halfway through the year. How do you guys feel like 2026 is going? Zach, I want to ask you first because honestly, your life has
Yeah.
been just turned around and flipped and all of that.
Yeah, I guess if I had to pick one word, it would be busy.
Yeah.
Well, yeah.
Yeah, since
Understatement. Yeah.
we last got together to record, I added another child to my family and moved 12 hours away.
That's right.
Wow.
So let's catch everybody up there. Everybody's doing fine, health-wise, it sounds like, right?
Oh, everybody's great.
Okay. And where do you now live? Because you were in the Cincinnati area.
Yeah, I was on the Kentucky side of the northern Kentucky side of the Cincinnati area.
Yep.
And I now live in Minneapolis.
Yay!
Yeah. So actually pretty close to you.
I was so lucky to get a chance to see you, Zach. You made a little bit of a detour on your way from Cincinnati to Minneapolis, and it was lovely seeing you. We took you out to dinner. We bought you a bunch of beer to take with you to Minneapolis.
Yes.
But it was lovely seeing you. And you know what? I should post pictures that
You
we
should.
took of us
Oh,
at the
yeah,
brewery.
you should.
Yeah,
I think
what
that'd
was
be
the name of
fun.
the
Yeah.
brewery we went to?
Working Draft.
Working Draft, yeah.
Really
You took
good.
me to your favorite brewery in Madison and got to show me a little bit of the city, and I thank you for that.
Well, I'm glad your move went well because your family, you went first, and then the rest of the family caught up with you a couple of days later, I think.
Yeah, I drove up by myself so I could be there when our pod got there,
Yeah.
and then my wife flew up.
Not podcast.
Yeah, I use them interchangeably.
Yeah.
All caps. I guess I should scream it. Pod.
Right. Pod.
And then my wife flew up with my daughter and son.
Great. And also, I want to point out, I don't know if Natasha knows this, but you shared this with me, Zach, that you got a new library card.
Really?
Talk about that really quick.
What's
if you
that
could.
about?
Yeah, so my family are big library enthusiasts.
Great.
So we made sure to get our county library card.
Uh-huh.
And June 7th was Prince's birthday, and in honor of that, they had a limited edition library card with him playing guitar on it.
Oh, wow.
And I almost ran people over running to the desk asking if I could still get it, if it was still available. So
Oh, wow.
Legit, and again, we should maybe post this. It's the coolest library card I've ever seen.
it looks more like a trading card than a
It
library
does.
card.
It's just
Wow.
Prince playing guitar.
Who knew?
Oh, so
I mean,
cool.
who knew that how cool the library could be?
Right.
No,
well,
I had no
and
clue.
also good for Prince's estate, being
Yeah, I'm
hip
sure
to
made
this.
money. Yeah.
Yeah.
But I'm so envious of you, Zach. Minneapolis is so cool, and you get to experience all Prince things. I don't know if you guys can hear the thunder. Sorry.
I did hear that. Yeah.
Okay.
Ugh.
Sorry.
Be
We have a
careful.
big thunderstorm. But I'm very happy for you. You're only 4 hours away. If you need anything, I'm ready.
It was a real easy drive. I was impressed.
Great. Well, I'm happy for you all.
Yeah, obviously, Zach, huge changes for you, and I'm sure there were a lot of stressful moments, I would imagine, but it sounds like you've all been getting through it well, and now you're there, so hopefully you can relax a little bit and
Yeah,
enjoy.
the stress is all gone now.
Oh, I'm sure it's just
It
gone.
totally diminished.
Yeah.
Enjoy
No,
the
that's
library at
fun.
least.
Yeah, that's a really fun story.
Yeah.
Now, quick question: does everyone in the family have their own card, or do just you got the card?
My wife and I have our own cards. The 3-year-old and 7-week-old are entirely dependent on us.
Sure.
I would think so. Yeah. Okay.
Natasha, how do you feel? And don't try to compare it to Zach's year because his is insane. And again, we're very happy for him and his family. But how's your 2026 going?
I think it's going good. I also think it's been busy and has come with a lot of changes because I've been settling into my new, house here in LA. So my partner and I moved from a remote mountain community into Los Angeles at the very end of last year. So we've been settling into that, and then I also made it also an addition to the family with my new puppy Deanie. So yeah, it's kind of like I'm doing what I planned and envisioned and living where I wanted to live and have things set up the way I wanted, but But then that doesn't mean that like everything's perfect, because I feel like I'm shorter on time than I was
Mm-hmm.
before. I have a lot more expenses with different things
Yep.
that have come up.
Yep.
So, I'm trying to kind of take a step back and be like, all right, let's let go of the stress. Let's try to relax and let's just enjoy the fact that like I've arrived to where I've kind of wanted to be as an
Mm-hmm.
adult, like with the way my life is set up.
Okay.
But yeah, it's also been a learning experience. So I've learned that like, well, when things are all set up into your adult life, it also comes with some more new stresses and
Mm-hmm.
problems and
Mm-hmm.
expenses, things like that.
Yeah.
So that's kind of what I'm going through. But yeah, overall, it's been going like I think pretty well.
Good.
So
All right. That's
what
nice to
about
hear. I'm
you?
very,
Yeah.
2026. Here's how what I'll say 2026 is expensive.
Yeah. Now, may I ask?
Yeah.
Because I took a few days off and I saw that there was a message on a Slack chain. You had to get a new water heater.
Oh, the water heater broke.
I'm
Yeah.
so sorry. Yeah,
That
that
sucks.
sounded. Yeah.
But yeah, not only, yeah, sure, there's that, but it's just everything is so expensive. And
Oh my God.
I'm tired of being shocked by it this year, if that
Really
makes sense.
unbelievable.
Like
Yeah.
every time I go to the grocery store, every time I do anything, I'm like, why is what used to be $60 now 110?
Yep.
Or I mean, just everything. And I'm just really tired of it.
So obnoxious. It is
So yeah,
obnoxious.
I've
Yeah.
tried to make a better point of, again, buying groceries and veggies and all of this stuff just so that there's no going out.
Yeah.
But the grocery bill is insane. And so I'm mad either way. So that's how I feel about 2026.
I think a lot of people will agree with that
Well, yeah,
assessment. Yeah.
I guess. But anyway, we should probably not let me go on about this or I'll get really mad.
Yeah.
But this actually has to do with the show and what is coming up next. So let's just turn the corner. But Zach, I'm very happy for you and your family. Natasha, I'm very happy for you and Deanie. You
Yeah.
guys
Oh,
are living the
thank
best
you.
life. Everybody else out there, welcome to Shared Accounts with CU Times. Coming up, we are talking with returning guest of the show, Bill Handel. He is general manager and chief economist at Raddon, financial services research company that's part of Fiserv. You've heard of it. I believe last time he was on the show, we dug into the credit union economy and the artistry of Jim Croce, which I think makes a return in this conversation that I had with him out in DC a while back. First up, though, let's take a break from the week. Check in with Natasha. Hey, Ann.
Hey, Em.
How's it going?
It's going.
And it's not hot there yet, right? We're
It's
not.
getting there. It's getting hot. Yeah, it's high 80s
Okay.
today. So, I am dreading the July August valley heat
Yeah.
era. It's not going to be fun,
Okay.
but I got AC, so I will be inside.
Absolutely. I can't imagine functioning without AC. It's been
Oh,
wicked, muggy, hot here, like southern, weather.
oh
And
yeah.
we're having a
Ugh.
thunderstorm, tornado warnings today as we're recording. So yeah, it's been really weird. It's hot.
I think that's even worse. I hate the humid type of heat, the southern heat.
Oh, I love it,
Really?
honestly.
Oh well, I sweat more and I
Yep.
get bitten by more bugs
Oh,
and
there's that.
it's just gross. But at least when it's dry, I don't have that issue.
Yeah, I
It's
suppose
just
that's
too
true.
hot and it's just miserable.
Well, speaking of all of that and the fact that you and I are absolutely staying indoors,
That's for sure.
what have you been watching?
So I started a new and big surprise cult documentary last night.
Okay.
Spoiler alert.
Uh-huh.
So this one, another one I had not heard of, which is just
That's
wild
weird.
and bizarre. So this
Okay.
one is on HBO. It is called Bring Me the Beauties, a model cult.
Oh my
And
God. How do you find these things?
I don't,
These,
they find me.
I
They
guess
just
they
pop
do
up.
find
They're
you.
like, this is what you like, so this is what you're
Okay.
watching next. I'm like,
All right.
okay. That's
All
what
right.
they're this right there in front of my
Okay.
face.
What was the title
Yeah.
again? What was that?
It is called Bring Me the Beauties, a model cult. And it is
Okay.
about this guy, his name was Frederick von Myers, and took place back in the 80s.
Mm-hmm.
And so he was a former male model and
Mm-hmm.
became this kind of new age guru.
Of
And he
course.
recruits this other guy, and he actually turns him into like a top male model in the 80s. His name was Hoyt Richards. So he was
Okay.
like this international like male supermodel during the time when there was like Naomi Campbell
Sure.
and all those people.
Yeah.
But then he was also in this cult and kind of used the modeling world to recruit people. And I guess the leader wanted like beauties, like beautiful
Sure.
people. Anyway, just watched one episode, so I don't know the whole story yet,
Okay.
but it is pretty strange. The strangest part is that the Frederick guy, the leader, he believes that that an alien took over his body. And there was a thing where people talked about back then called walk-ins, where like you would still be the same person, but then an alien would like walk into your body. So you're also
Okay.
embodying like this other thing.
Okay, sure.
But then they're also like going to like Studio 54 and partying
Awesome.
in New York.
The alien made me do it.
Yeah, I guess it has been a fun watch so far.
Okay.
So, there we go.
One wasn't shocked that a white male started this cult, but I wanted to ask, are there a lot of cults started by female people?
Not many, but there's some. Yeah, there
guess
was
there's
like
some.
the one is also on HBO called Love Has Won, and it's this woman who led the whole thing, and
Okay.
she like had like a colloquial silver overdose and turned blue,
Okay.
and then she ended up dying, and they like were hiding her body and
Huh.
driving around with it. Very weird story, but yeah, that one was called
Nice.
Love Has Won. That was a woman.
Okay.
But yeah, I would say they're rare, but yeah, there's
Okay.
a lot of crazy women too.
Well, let me know how this new one goes.
I will.
Okay, great.
Okay. What about you? Anything interesting?
I got to say, I am with the times right now. Usually I'm not this hip and
Okay.
timely with watching my movies, but went and saw the sensational movie Obsession.
Oh,
If you all-
I'm wanting to see that. Yeah.
If you heard about that and Backrooms have just taken over the box office so far this summer. Obsession was made for about $750,000. It is going to make around $200 million.
Oh wow.
It's potentially going to be the most profitable movie ever made, but it is so good. I
Okay.
can't stress it enough how good the writing is. The acting is actually tremendous. The lead character, she is just great. Her name is Indy Navrette. Never heard of her, never heard of any of these people, but it's a careful what you wish for type movie.
Okay.
But it goes in directions just so creative and so wonderful and so gross. So
Gross.
horrible.
Okay.
Yeah,
Is it
it's
scary?
a horror movie, so it's a little gross. But it was the best time. Just outstanding. Bravo.
Oh my gosh. Yeah.
these
I can't wait. I really want to. There's been so many movies that have been in the theater that I haven't been to the theater, but that one, Project Hail Mary, I can't wait to watch that because
Yeah.
I've read the book. It was one of my favorite books.
Yeah.
And then this Obsession you had pointed out to me. I absolutely can't wait to watch it.
It's why you go to the movies to see something like this, you know? I gave it 5 stars. I just had a tremendous time with watching it. We had a great time.
Okay. Fun. Awesome. All right.
Go check it out. You know what it also made me want to do is join a movie club, which I haven't done that since the 90s. So,
Oh, yeah.
I don't know, maybe I'll do that. Anyway, support your local theaters, people.
Right.
Okay, so let's just get into the interview with Bill. Natasha, you and I know Bill well. We love this guy. Bill and I connected again for this interview in Washington, D.C., and we were talking a bit more about the precarious economic headwinds facing credit unions. And we've only had really negative economic news for a little while. Interest rates are going up. The cost of living of everything is going up still, like we were talking earlier. But despite the challenges we get into, Bill remains pretty damn positive about what's going on. I love his optimism. We really dig Bill. So let's get into it. All of that's coming up next. All right. Hey, everybody. I am fortunate to be able to meet some really interesting people that we get to have back on the show. And today I'm in DC. I've been doing a bunch of interviews, but I am now with Bill Handel. You know him as general manager and chief economist at Raddon, a Fiserv company. You may also know him as a big Jim Croce fan on a previous episode. But Bill, nice to see you.
Great to see you.
Yeah, in person, not
yeah, it is
over the
nice.
phone. This
Very
is
nice.
lovely. Okay, I have a handful of questions, kind of talking about general economic outlook, consumer health issues and stuff from your perspective. And then obviously we got to talk about Jim Croce. But first, when you're looking at it, at the economic data right now, rates, consumer liquidity, credit performance, what are credit union CEOs potentially overreacting to, and what are they maybe underreacting to?
Yeah, I think that's a great question, by the way.
Thanks.
So if I were to say, first of all, in terms of the overreaction, I think there's probably maybe a little bit too much focus on, the notion of a collapse of the stock market. I'm not saying that the stock market's not high. It is very high.
Yeah.
And it's very high by historical standards. But this is a very different period today than the last time we had a crash, whether you're talking about 2001 or 2008.
Yeah.
And so I'm not saying it's sustainable at the same pace. In fact, we don't believe it will sustain. We think it'll move sideways for most of this year, which is typically what happens in election years, off-peak election years, as the market moves sideways until you get about halfway through the year. I anticipate that will likely be the path that we'll take.
Yeah.
The reason that matters is because there's a major concern, and I think it's validated, that a lot of this economic strength that we've been experiencing is driven by the wealth effect.
Okay.
So people feel wealthy. People with assets feel wealthy because of good valuation of stocks. My point in all this is we don't think that there's an imminent collapse happening out here, that the stock market will there's no reason to believe the stock market will go crazy and then you'll move us into a severe recession.
Okay.
So that's probably one thing that a lot of people are obsessing about, is when is this all going to come crashing down? We think there is some strength behind it. What's also very different about this time is that there actually is true earnings behind a lot of these corporations which are driving stock valuations, unlike 2001 or 2008.
Right.
So it's a little bit different. So that's probably one of the things we're saying is, don't be putting all your eggs in this notion that this is all going to collapse anytime soon. At the same time, I think you have to really be aware of the risks. So for example, we're seeing delinquency rates on auto loans as high as they were in 2008.
Yep.
Right?
Yeah.
So you do see some risks out there, and you have to manage those risks appropriately. With the price of vehicles these days, and with the average American really is struggling. We've finally begun to catch back up, but still haven't caught back up to wage levels on an inflation-adjusted basis as they were in 2020. So we're only just starting to get there. So I'm saying what I think what a credit union executive has to understand is really having a balanced view of the economy.
Yeah.
So understand that we're not probably at some point of imminent risk of massive type of failure, but also there are risks out there. And I think the risks are probably more severe than just a macro view of the economy would suggest. Think about it. We had really strong second quarter growth, GDP, really strong third quarter growth, close to 4%, or close to 4% in those quarters. First quarter was only negative because of artificial factors, what was happening with tariff activity. And the fourth quarter would have been very strong without the government shutdown.
Yeah.
So there's reasons to be optimistic, but you have to be really balanced. Just understand that there still is risk out there.
You mentioned the delinquencies. We recently did a months-long bit of research into the numbers, and 7 credit unions are holding 22% of all the commercial loan delinquencies. Anyway, we're finding, and that troubles us when so few are holding so much in that 2-year auto loan delinquency issue and in commercial loans now. To the consumer, you were talking a bit, based on Fiserv's research and transaction data, what are you seeing in real-time consumer behavior that might not yet be obvious in some of the reports that we're looking at?
Yeah, in the research that we do, I think the thing that's really important for this industry to understand is the risks that this industry faces. And I call it an existential threat. That's coming from the largest banks. The most recent research we've done shows that something around 80% of Gen Zers and millennials are now stating that one of the top 5 or 6 banks is their primary financial institution.
Yeah.
And so we've seen that grow for the younger generations year by year by year, pretty dramatically. And what's happening is that all the other players are shrinking. Credit unions and community banks are in the same space. They're finding this share of primary actually shrink, and quite dramatically. And in fact, what's really interesting in this most recent research, and this is the second time we've seen it now in our research. First time was pretty amazing. But more of the younger generation are likely to say that a online bank, online only type bank, fintech, is primary than will say that a credit union is primary, or will say that a community bank is primary. Credit unions and community banks are kind of in the same space here, and it's like they really need to take a look at what's happening out here, why they're not resonating with the younger generation.
You said this is the second time.
First time was just the last time we did the research, and it just repeated itself. So now the fintechs, the online banks, have a higher primary share with younger people than do credit unions or community banks.
What's that telling you?
It's telling us that what we often associate as a value proposition does not have as much value to a younger person as we might perceive. Right? And so think about how a credit union promotes themselves so often, unfortunately. Right? They talk about rate. Oh, you get my auto loan for whatever rate you're going to promote out there. You can get my whatever. It doesn't matter. Or I shouldn't say it doesn't matter. It matters less.
Yeah.
And
you're saying all this, and I am thinking about every credit union marketing executive I know out there, and they're like, at this news should be like, oh crap, we gotta rethink what we're doing. That is awesome. Not awesome, but I mean, it's awesome information, to have.
I think we really, as an industry, we really need to think about what our true value proposition is, because I think the lesson from the big banks and the lesson from the fintechs is the same, which is that how we do business, the speed, the ease is really, really the critical piece overall. It's not just about price. Price, it does play a role, there's no doubt. People are going to make decisions based upon price, but it's not going to necessarily be the primary driver, and especially for a young person, because price doesn't matter quite as much to a young person. Rate, what I mean. When I say price, I mean interest rate. This doesn't matter quite as much. So I think that's the key things. And it's important to understand this because, what they're really promoting, if you watch B of A or you watch Wells or watch Chase, they're not talking about price. They're not talking about interest rates. They're always talking about, how we make your life easier. We just make it easy to do things, which is what the average consumer wants. As an industry, we're never going to spend the money that Chase does around technology. We have acknowledged that.
Right.
What we have to do is we have to close that gap, and then we have to find something that we can really truly stand on as a differentiator. And I think that's going to be our challenge.
On the podcast, we talked about AI kind of broadly. And since then, well, I'll say it this way. Here at GAC, AI is a lot of the discussion. And I don't know how I feel about it. I don't even know how to explain that sentence I just said, because I don't know if the right message is being put out there, really, for what credit unions need. But are you seeing any movement in this space that is interesting to you in the credit union space and AI?
Yeah, a little bit, but I think it's more dabbling for sure at this point. I think we're dabbling in it, and I think we're going to find there's some ready use cases. Where you're talking about fraud detection, and you're talking about things like this, it makes a lot of sense, and it's an easy play. When you talk about the notion of trying to utilize data to make better decisions, better decisioning, it makes absolute perfect sense. And I think there will be a lot of support to move down those paths. It'll improve our productivity, but more importantly, I think it'll improve the quality of what we do.
Yeah, I mean, when it comes to growth, talent acquisition, maybe, I don't know, more so than revenue. More internal growth. Hopefully that can be a positive.
I think what you're going to find longer term is that AI will play an increasingly important role in member service. I think it is going to play a role there. I think that will absolutely happen. We're not comfortable with it right now, but I think it will play a role there. But I don't think it replaces, I think it augments.
And you're talking beyond the call center?
Yeah, I am talking call center. Well, start call center is a logical
that's usually
place.
Where people are starting.
Right, that's a logical place to start. But so if you think about the value proposition of a credit union, to go back to the conversation we were just having about value proposition, what is that thing that differentiates us? Maybe it should be around that we are the true advocate, and we can claim this, we're the true advocate for the member. We're helping them to create their best financial life. We're doing the advisory side of things and really doing that well. Well, we're going to use AI. I mean, that's exactly the way we'll use AI, because you can build out those type of capabilities and they'll be profoundly good. But you still need that human intervention, side by side, because You want to be able to tailor this thing specifically for this individual and the things that you know about this individual, what their risks are, what their risk appetites are, and what's important to them. You want to be able to tailor that in a way, and that's where the human element. So it's almost like a partnership between AI and the human community, so to speak, right?
I'm not saying this to kiss your butt, but I want to say this. Do you understand how smart you are?
Don't tell that to my wife.
Okay, fine. Okay, one last question here.
Sure.
I want to ask kind of a bigger year view, if you will. If you were sitting in the CEO chair of a $1 to $5 billion credit union today, what would be 1, 2, or 3 strategic kind of bets you would make that you're going to place over the next 12 months for your credit union?
Yeah, great question. It is a really good, it's a great question. I think what I would want to start with is the premise that the business model is different, and it will be persistently different for a number of different reasons.
Okay.
I'll give you an illustration. In the past 30 years, what you've seen in this industry, and it's also true of banks, is that evolution of the business model where margin becomes increasingly more difficult to attain. Now, you see ups and downs with margin because of interest rate environment, but when you look persistently over 30 years, margins are less than they were. Okay. We're going to operate on thinner margins. We're also not going to have the same levels of non-interest income, because remember how we built non-interest income, unfortunately in this industry, was through things like courtesy pay. Yeah. Okay, well, I say that not that I think it's bad, but I think that it's almost like anything, you build an over-reliance on anything, it can become dangerous, right?
Absolutely.
All right. And then we also built, interchange. Well, we know where interchange is. Whether interchange is because of
you want to talk about interchange?
Right, yeah. Whether it's because of Durbin,
or
whether it's because of things like stablecoin, which will change the equation, right? We can't rely upon non-interest income in the same way that we've always done. Yeah. So when you look at that, then you have to say, well, the key driver from our perspective in terms of if I'm a CEO managing an organization, I want to know what my efficiency ratio is. That's the key thing, because it tells me whether or not I'm balancing my expense with my revenues, whether I'm keeping those in the right order, right? Or if I have the right amounts. Efficiency ratio is really king. And so if we're seeing non-interest income decline and we're seeing margin income decline, what that means is I really have to be so much more effective with how I spend my dollars.
Okay.
I've just got to think about this. What I would be thinking about from an organizational perspective is talent. Because what I would like to do is I'd like to say, in 10 years, can I be operating with half the amount of people per asset, but be paying those people twice as much? The quality, or 50% more. The quality of them is that good, and then I augment their capabilities with things like AI. Yeah. Just create that powerhouse of an organization that really focuses not on the transactional pieces, because that's going to be automatic, but really focuses on the membership and helping them to achieve their best life. That's how I would be thinking as an organization.
I hope CEOs are listening to that, because that's some really strategically awesome things to hear in an environment where not always want to hear that or listen to it. But I do hope they hear it, because it's a legitimate bits of information and advice that it's worth not only discussing but thinking about and potentially planning for. Okay, Bill, you've been on the show before, and there's a part 2 to this interview as always. So you were on the show earlier this year, and we got some great feedback from the show, because you were the first guest to ever bring up Jim Croce as their first album. I love Jim Croce. Listened to him in 8-track, growing up, all of that. So I want to expand on your music tastes a bit for the final segment here, but I have one Jim Croce trivia question.
I'm probably going to fail.
No, it's not bad. Just take a guess. Of these 3 hits from Jim Croce, Time in a Bottle, Bad Bad Leroy Brown, and Operator, which one was not a #1 hit?
What was the second one?
Okay, Time in a Bottle,
Yep.
Bad Bad Leroy Brown, remember that one?
Yep.
And then Operator,
Yep.
which was not.
I would guess that Bad Bad Leroy Brown was not #1. Wrong?
Wrong. Here's the thing. Time in a Bottle, you remember that one?
Yep, I remember that one.
Time in a Bottle. Bad Bad Leroy Brown both hit #1 in the same year.
Okay.
1973.
Okay.
Operator did not. I was a little surprised.
Okay. I'm surprised by that too.
Operator's
I thought
a great
Operator, because
song.
that's the one I remember being repeated so often.
Okay. Second question. Well, by the way, right before we were recording, you mentioned you recently saw the Eagles
Yep.
live out in Vegas. How was it?
That was great. It was fantastic.
Okay. And obviously not the full original band, but Don Henley, Joe Walsh.
Joe Walsh, right?
Okay, great. What was the first concert you ever went to?
God, that's a good question. That is a
Okay,
really,
one you remember.
The one I remember actually was Bruce Springsteen.
Oh,
Yeah.
crap. What year was
Yeah.
that?
It was sometime in the 70s.
Okay.
I remember that. I remember it was actually in this little auditorium I don't know how little it was, but it was in Columbus, Ohio.
Really?
Yeah. Because I went to school in Ohio, and
Yeah.
so I was in college. That's one of the first ones I remember.
Are we talking Nebraska?
No. This was Born to Run. That's how.
this is
I am.
Born to Run?
Yeah, this is at that time. This is after Born to Run came out, so
Okay.
it was sometime in that era.
That's awesome.
Yeah.
You remember like
Oh yeah, he was a young guy back then.
like full beard probably back then. Well, maybe not. I don't know.
Yeah, I don't know if he had a beard or not. I don't think he did actually. I think
How
he
was
was
it, though?
really.
Do you-
It was very energetic, as you might expect for
Yeah.
a Bruce Springsteen thing.
Okay.
It was very raw though.
I bet.
Very raw, yeah.
Third question. Did you ever take music lessons as a child?
Yes, I did.
What was it?
Piano.
Were you any good?
Well, I lasted for 2 weeks. Unfortunately for me, I wish I'd gone longer. I was too young. I wish I knew
How
piano.
old were you?
I was like 8. My mom really wanted me to play piano, so she got me in.
I
and
think we
was-
had the same mother.
Yeah. Oh, yeah, she really wanted me to play piano, but I couldn't do it. I was too young. I really wish I had followed through.
I do too, but I hated it so much.
Yeah.
And I was, again, 8.
Yeah.
And I was like, this is the most boring, dumb
Yeah,
thing I
totally.
could ever do.
Yeah.
Can I go ride my bike, please? Okay, but anyway, what's your mom's name?
My mom's name is Marie.
Marie.
Yeah.
God bless.
Yeah.
Last question. If you could play any instrument, what would you want to learn and why?
That's a great question. That's another great question. I think very often I think about the piano just simply because I think
Oh, yeah.
that kind of lets you play almost anything.
Yeah.
If you can play the piano, you learn music and play almost anything.
Yeah.
But I still think that probably the thing I would always like to play, and which I play a little bit today, is guitar. So I do play a little guitar, but
Like
not well.
what kind of music do you like to strum?
Almost anything.
Okay.
Almost anything. But I'm not good, so don't ever ask me
Like-
to play. You don't want to hear me play.
Rockin' Robin? Rockin' Robin.
Well, yeah, it has to be 3 chords because
Yeah.
I can make my way through 3 chords.
Bill, I love seeing you in person here. I'm
Great to
really
see you.
thankful. Ladies and gentlemen, that's Bill Handel, General Manager and Chief Economist at Raddon, a Fiserv company. Bill, you're lovely. Please come
Thank you,
on
Mike.
again. I appreciate your time today here
Anytime.
at JC.
Really appreciate it.
Thank you.
Thanks, Mike.